Hello, good afternoon. This is Manuel Vargas with Keller Williams Realty Landmark and Keller Williams Realty Landmark 2. And today I'm going to share with you what happened with the Queens real estate market in the first quarter of 2022. Um, I have some statistics and my own interpretation of what's happening. I hope you enjoyed this market update. And any questions, feel free to contact me. First of all, the big story of the quarter was the increase in interest rates. The rates ended up at 4.72% for 30-year fixed mortgage at the end of the quarter, at the end of March. We all know that they're still going up. We are in the middle of April already, and the rates are already 5%. And this is part of the tightening by the Federal Reserve in increasing the interest rates and trying to keep inflation lower. Now, in strict terms, 4.72 is not about interest rate. This is the levels of a little bit before the pandemic, 2018, 2019. These are pretty good rates for compared to historical standards. But what is making a difference is the pace of these increases. It's been really, really fast. The interest rate in December, beginning of December, was 3.11. And so the rates have gone up for 30-year fixed mortgage, 1.5% in 3 months, which is very fast. Part of the reason, like we said, is because the Federal Reserve is increasing the overnight funds rate, trying to keep inflation down. So what was happening with inflation? Inflation in February was at a 40-year record, was 7.9%. Now the numbers are just out for March. The inflation at the end of March, the CPI, the Consumer Price Index, was 8.5% higher than a year ago. This is also a 40-year record. So inflation due to the supply chain disturbances, due to the price of energy, due to the tightening of the labor market because salaries are going up. All of these factors have contributed to a high inflation and also keeping the rates lower to stimulate the economy during the pandemic has also affected inflation. So that's also one of the big drivers of the market changes in the first quarter. Okay, now let me tell you what's happening with Queens in particular. Now, unemployment in Queens have been getting better, have been improving, but we are still in Queens as of February of this year at 6.3% of unemployment, which is higher than at pre-pandemic levels. This is different than in the rest of the country, like we discussed in the last quarter of 2021. Queens is lagging behind the rest of the country. My own interpretation of this is that there are several industries that are motors of the economy in Queens that are very important. One is the building industry, and the other one is the hospitality, food industry, restaurants, catering, all that. These industries are still not back to the levels before the pandemic. So unemployment in Queens in February was 6.3%. Now let's look at how this is affecting the real estate market in Queens. And the answer is that the real estate market in Queens is surprisingly strong, still a seller's market. What we're going to see is that inventory is very, very tight. So yes, affordability is going down because interest rates are going up, the price of utilities is going up, heat and electricity is going up, affordability is going down, also because of the price increasing, but inventory is not up. So this is keeping a lid on the prices. This is what the market in Queens is so strong. So yes, affordability down, interest rates up, but inventory low, prices stable. That is the summary of what's going on in Queens. Now let me give you some ciphers, some numbers. The inventory in January was 6 months of supply. This is a balanced market, presumably because of the winter months. Not a lot of people are active in the market. And then what happened in February, that the market realized that the interest rate was going up, and there was a rush of buyers in the months of February and March to buy before the rates got higher. So in February, the inventory went from 6 months in January to 5.1 months in February to 3.5 months in March. So, inventory is really, really low in Queens. If you have been thinking of selling, there is not enough inventory. Yes, rates are up, but there are very few properties on the market as compared to a balanced market. So this makes the Queens real estate market a definite seller's market because the inventory is almost is 3.5 months as of now. Also, let's look at how negotiable were prices in Queens and how has that changed. I can tell you that in January, for the properties that closed in January, the difference between the original asking price and the final selling price was 4.6%. In February, the difference was 4.5%, so a little bit less negotiable. Now in March, the difference was 4.8%. So I would say, all in all, a difference of less than 5% is still very good. And this is an average for Queens. You got to realize that in different areas, of Queens, this price difference or this negotiability may be different. So for the whole Queens, on average, the negotiability of asking price to final selling price has been below 5%. So a very strong market in Queens. Then let me tell you what's going on with one family houses. The median prices for one family houses went from 120,000 in January to 783,500 in February to 795,000 in March. So 820, 783, 795. So to me, this is the market showing stability in prices. Also, the number of transactions for one families, they went from 343 in January to 330 in February to 341 in March. So also showing stability in the numbers of transactions for one family properties. Then for two family properties, the situation is similar, maybe a little bit, I would say, with better numbers than one family houses. So the median prices went from January, from 992,500 to 1,050,000 in February to 1,065,000 in March. All median prices. That doesn't mean that there are not sales that were higher than 1,065,000 or lower. This is the median price, the price in the middle. We track it because statisticians believe that this is a good way to gauge changes in the market. So for two family houses, there was an increase from 992,500 to 1,050,000 to 1,065,000. And there was also an increase of transactions. In January, there were 174 sales of two family houses. In February, 165, and in March, 184. So how can we explain this increase in median price for two family houses and also in transaction numbers? We can explain it because of the increase of the rentals. A year ago, the rentals were depressed due to pandemic factors. Now, a lot of people have come back to the city. Uh, the landlords are not giving any incentives or freebies, if you want to call them that. And the rentals have increased in double digits in Queens. So now this is supporting the value of two-family houses in Queens. For 3 and 4 family houses, the panorama is similar, with prices going, median prices going from 1,320,000 to 1,348,000 to 1,330,000, right? Transactions are also increasing from 21 deals in January to 18 deals in February to 27 in March. We can also explain this improvement in price and transactions for small multifamilies, 3 and 4 family houses, because of the rental market, and also because the eviction moratorium ended in January 15. So this is helping the landlords deal with tenant issues. So again, for 3 and 4 family houses, it's a strong market in Queens, not a lot of inventory, median prices showing strength, transactions showing strength, and a good market for the sellers. As to co-ops and condos, let me tell you what the numbers show. The numbers show stability. Maybe not an increase, because we went from 355 median price to 350 to 355. So we're showing stability, like in the case of 1 family houses. Also, transactions numbers pretty stable, maybe a little bit lower, from 403 closings of co-op condos in January to 356 closings in February to 390 in March. So the transactions are slowing down a little, but the prices are staying the same. So all in Queens, very strong market with a strong appreciation for multifamilies and two-families in this quarter, with a stability for 1 families and apartments, co-ops and condos, and with transaction numbers in general increasing, except for apartments and 1 families that are slightly down. So a strong market, low inventory, higher rates, but still a seller's market in Queens. Let me tell you what else do I have to share with you. We talk about the inflation going up and the interest rate going up. It has yet to be seen what's going to happen in the following quarter. We do know that the Federal Reserve is going to increase the rates. So we can expect higher mortgage rates, but inventory is still being the problem. And that is going to counterbalance this increase in interest rates. The million-dollar question is, how much are the rates going to affect the market, and how much is the inventory going, the lower inventory, going to affect the market? And if these two factors are going to cancel each other, we don't know that. We cannot predict the future. We can just tell you what happened. But these are two strong forces in the real estate market in Queens. Right now, interests are higher, but still very good, as per historical standards. And inventory is low. This is an excellent market for sellers. What will happen next quarter, we'll see, and I'll share it with you. If you are thinking of selling a property, by all means, call me, 917-559-2002, and thank you for listening.